Hello guys, welcome back to the channel, the Daily Forex. In today's video, I'm going to share with you guys a very powerful strategy that you can use to get short-term candlesticks and also cash spike on the market on crash and boom. All right, so let's get on with it. So first and foremost, I'm going to share with you guys the parameters for the indicators that I use to be able to get an accurate entry for a buy and a sell. All right, so first of all, we'll click over to this F icon right there, and you can currently see that we're using the average directional movement index, relative strength index, moving average, double moving averages, and the momentum. Right, so the indicator window one, you want to put on the average directional movement index. You put it on period 1. The levels, you add 5 and 95. Okay, then for the style, you put that on 3 pixels with color black with this first trend line. Then you click on done. Then for the style right here, you put that on 2 pixels, the same with plus di, put plus di on 3 pixel, minus di on 1 pixel with color white. Okay, color white, make sure that is the color of your screen, right? Then you click on done. Basically that's the average directional movement index. Okay, then the second indicator is going to be the relative strength index. Period 1, you apply to close. For levels, you add 30 and 70. For the style, you put that on 3 pixels with color black with this middle trend line. Then you click on done. For the style right here, you put the pixel on the 1 pixel with color white with this black line. Then you click on done right there. Okay, then for the moving average, the first moving average, you put that on period 25, shift 0. Method is going to be exponential. Okay, then you apply to close right there. For the, you don't add any levels. All right, for the style here, you put that on 1 pixel with color purple with this trend line, first trend line. Okay, you want to make sure that you put the pixel on 1, then you click on done. Okay, then the second moving average, the parameters are different, not the same. Okay, the period, you put that on 10, the shift, you put that to 0. Method is going to be simple, right? Then you apply to close as well. You do not add any levels. Then you put the style on 1 pixel with the same color purple, all right, with this first trend line. Then you click on done right there. Then the last indicator, which is the momentum, you put that on period 9, you apply to close. You do not add any levels. For the style, you put that on 2 pixels with color blue with this first trend line here. Then you click on done. Perfect guys. So like I said, we're gonna be getting short-term candlesticks perfectly. Then we're also gonna be cashing spikes with the same strategies. Okay, now basically what we're seeing right here, this line, as you can see at this very point here, this 90 and this level 5 is the average directional movement index. Then this line right here, which is this one here, and this other one is the ROSI, which is relative strength index. Then these two purple lines are the moving average, and this blue line is the momentum. All right, now as you can see at this very moment, how do we look for a perfect entry? You wait until the moving average crosses this other moving average below this level of 5. All right, below this level of 5, then you place a buy for 10 candlesticks. Perfect, right? And when you see at that very moment, you will notice that whenever this two moving average crosses below this level of 5, they crosses below at that very point, you will notice that this momentum right here we either cross below that point, or the lines is going to be, you know, a little bit wide, just as you can see from this point here to this point at this moment here. You notice that the two lines are a little bit wide. That should also give you, you know, a good confirmation for you to go into the market for a buy. But before you enter into the market, you want to make sure that these two lines here for the momentums, you know, there's a space between them, a really good space, just like this, right? You wait for the other confirmation for these two moving average to cross below the level of 5, and they need to cross each other as well before you place a buy to get that accuracy. All right, to get that accuracy, you can see even at this very moment below the level of 5 of the average directional movement index, you can see that this momentum, you can see the space between them, it's really, a little bit wide. So that's the kind of space I'm talking about that you need to observe. So this momentum will come at this very moment before there's a crossing above, the crossing between the two moving averages below this level of 5. Then you place a buy for 10 candlesticks. All right, as you can see at this very moment, both below the level of 5, the momentum, you can see how wide it is. Then you immediately place your buy for 10 candlesticks. If you want to be a little bit more careful on the market, you can lower the the candlesticks to about 6, between 5 and 10, right? But this strategy is for 10 short candlesticks. There may be an instance whereby the spike might come into the market, but it's going to be a very little spike, probably 3 candlesticks away, taking away, minusing 3 candlesticks. I think 3 to 4, maybe that's how long the spike is going to be, but it's not going to be that long. Okay, it's not going to be that long spike that normally, it's not going to be like this, right? So you can see that this strategy is very simple, right? It's very simple strategy. Like this is an example of what I'm talking about. There's a crossing at this moment below the level of 5. When you place your buy at this very moment, you can see that the spike that came through at this very moment it only took 3 candlesticks, just like I explained, and after another moment, about 6 candlesticks, another spike came through. It only took away just 3 candlesticks as well, just like I said. So you can see the accuracy. Spike might come into the market, but it's not going to be as big or as long as this or as long as this. All right, I hope you understand what I'm saying. And you can see that even after these 2 spikes came through, the buy was still massive. All right, was still a massive buy. So you remember that you put in the average directional movement index first. All right, put in the average directional movement before the relative strength index, then the moving average. Then you wait for that perfect opportunity when there is a crossing below. There is a crossing below between the moving average below the level of 5. Then you place your buy entry. Then how do you catch spike? How do you catch spike? You catch your spikes at this point in time, at this very moment, when the moving average crosses above. You can see that it only took about, if we zoom into the market here, you can see at this very moment it was only in about 1, 2, 3 before the spike came through. All right, so you wait for that very moment when the moving average, both moving average, okay, they need to cross above the level of 95. Then there was a spike. So if you want to catch the spikes only on crash market, remember we're using crash 1000 index. Okay, all you need to do is wait until the crossing above the level of 95. Then you enter into the market for a sell. Then you wait until the crossing below the level of 5 between the 2 moving average. You enter into the market for a buy, and you observe how wide the momentum line is to get that perfect entry. All right, now so let's go over to the bull market so that will show you guys how you can do this. Now over to boom 1000 index, we're using the same parameters for boom 1000 index. So on the boom 1000 index, you trade the market in a reverse way, because on the bull market basically you can see that you will sell the market and crash will buy the market, right? So look at it. You wait until both moving average have crosses above the level of 95. Then you go into the market for a sell. You take 10 candlesticks. You can also take 5 candlesticks to even be more safer on the market. At this very moment, above, take a look at this point, 10 candlesticks. Even when it went below, at this very moment there was a crossing during this point. You can see you go in again for 10 candlesticks. All right, so I hope you understand what I've said to you guys using the average directional movement index and also the relative strength index and combination of the moving averages. Right, so I believe after watching this video you understand everything that I've said to you guys, and also join my Telegram community. On my Telegram community, I share with you guys tips, strategies, and I give free signals on synthetic indices, boom and crash index, volatility 75, and also currency pairs as well. I give you guys free signals in my Telegram community, and I share with you guys tips, strategies on how to trade as well. Okay, so if you found value in this video, to like and subscribe to this channel, the Daily Forex, for more short trading tips, for more awesome trading tips and strategies. I'll see you guys on the next video.